Take a look at this stock market journey for Yes Bank. What do you see in this chart? A business that gave exponential growth to its investors for the first few years in what I call the growth phase. Then came the wealth destruction phase where 80% of the investors' wealth was wiped out in only 1 year. Then came the recovery or the resurgence phase. The Yes Bank growth reached another level and it hit an all-time high in terms of its stock price. But then in 2018-19 came a final blow and it struck Yes Bank to such an extent that the stock became a penny stock and it's trading at around 10, 11, 12 odd levels right now. So if you are an investor of Yes Bank or if you're someone who wants to invest in this stock, please watch this video till the very end. I'm going to be telling you the business story of Yes Bank, what worked for them, what didn't work for them, the financials of Yes Bank, the risks involved, and most importantly, can Yes Bank stage a turnaround from here? What is the future of Yes Bank going to be? All of that and much more, let's find out in this video. Let us first talk about their growth phase from 2005 up until 2008. The stock price jumped from 12 rupees to a high of 51 rupees. That's a growth of 325% and a yearly growth, the CAGR growth of close to 60% on a year-on-year basis. But why did all of that happen? So this was a time when the private sector banks were still emerging. Not a lot of banks had strengthened their position in the market, and Yes Bank came at the forefront at a time when the banking space was growing. Even the Indian economy was on a growing trajectory and banks had to assist in this growth. Yes Bank was able to latch on to that opportunity by providing all kinds of banking services to its customers and opening up newer branches as well. It's exactly because of this reason that Yes Bank's stock price moved from 12 rupees to 51 rupees only in a span of 3 years. But there was something that was about to come up that was going to negatively influence the stock price of Yes Bank. What was that? Let's find out. Take a look at this chart from 2008 onwards. The stock of Yes Bank went from a high of 51 rupees to a low of 9 rupees in just 1 year. Now that is 80% of the wealth destroyed in a matter of 11 to 12 months. But why did this happen? Now this was a time when the global financial crisis had hit the world. The entire world economy was going through a recession. Naturally, the demand for loans had to go down at this point of time. Banks, which were at the forefront of this crisis, had to suffer a lot due to the financial crisis. Yes Bank was no different in that regard. Because of lower demand of loans, their asset class not being able to go up as fast as they would have expected, this posed a pressure on their overall financials and hence you see the drop in their stock price as well. But one unfortunate incident also happened with Yes Bank. In 2008, their founder was a victim of the Mumbai attacks. Because of the huge amount of uncertainty that was associated with Yes Bank after the untimely demise of its founder, the stock price took a huge beating. And for anyone who invests in the stock market, let this be a lesson. Uncertainty in the business performance is a huge enemy of the stock market as well. Naturally, Yes Bank stock fell down to hit an all-time low of 9 rupees. But what happened post 2008 when the global financial crisis, when everything recovered? Did Yes Bank recover? Let's find out. Alright, if you take a look at this chart, you will see that the stock hit an all-time high of 382 rupees following the global financial crisis. The period from 2010 up until 2018 was a golden period for Yes Bank, for its business and for its investors as well. The bank opened up new branches, 33 in 2009, around 60 in 2010, and it was in a massive growth spree. Because they were expanding so fast, newer subscribers got added, which in turn contributed to their revenue. If you take a look at their revenue from 2012 up until 2018, If you take a look at this chart, you will see that the revenue increased on a year-on-year basis, which is a phenomenal growth for any bank. If you talk about their profit, a similar growth was observed in their profit as well. Now try to visualize this. A solid growth in the top line, which is revenue, a solid growth in the bottom line, which is the profit. And there was even a time when Yes Bank was called as one of the fastest growing and one of the biggest bank in the private sector banks. But was that a little too soon? What happened post 2018? Let's find out. Post 2018, the stock price of Yes Bank continuously started to fall down to an extent that Yes Bank stock is now reduced to a penny stock and it's trading in the range of 10 to 15 rupees. But why did that happen? A global financial company by the name of UBS had pointed out that the growth that Yes Bank is showing in terms of the loans that it is giving was true, but those loans are being given to stressed sectors, the sectors which are very likely to not pay back the money to Yes Bank. It was indeed a very correct observation. Within no time at all, the non-performing assets or the NPAs of Yes Bank started to shoot up. In the March 2019 quarter, they reported an all-time high number of gross non-performing assets, GNPAs of 19%, which is significantly high. It later was proved that they had given a lot of loans to companies like DHFL, Cafe Coffee Day, where the probability of getting back the money was indeed very low. This posed a pressure on their bottom line, which is their net profit, which is why Yes Bank also turned into a loss-making company in these given years. You combine it with the fact that their founder was also accused by ED in a money laundering case, and that just makes the situation very bad for Yes Bank in general, and hence you see the kind of numbers, the kind of decline in the stock price of Yes Bank as well. But what does the future of Yes Bank look like? What could be the projection there? Let's find out in the next segment. When the situation of Yes Bank went from bad to worse, RBI and the Government of India intervened in the matter. Now there are enough signs that Yes Bank's worst days are past them, because banks like SBI, HDFC Bank, even ICICI Bank had to infuse capital into Yes Bank to help its recovery. But can we say that the business is going to show a remarkable turnaround from here on? Can we also tell whether this business is going to achieve its all-time high of 382 rupees in terms of its stock price? To be honest, at this point, I don't think that is going to happen. Yes, the business has started to recover, but what I am looking for is stability in their business performance and post that continuity and sustainability, which means that they need to show a growth in their profits as well as in their revenues on a year-on-year basis, on a quarter-on-quarter basis. Only when that happens will I be confident that yes, it can go up from its current penny stock levels of around 10 to 15 rupees to a 30 or a 40 or a 50 odd level. I would still maintain a wait and a watch rating on Yes Bank's stock because I want to be confident enough that their business can grow sustainably in the long term. Alright, that was my analysis on Yes Bank's business. I hope you enjoyed the video. Do subscribe to Finance Lens and I'll see you the next time.